it is time for the top 10. These are the only trades you need to know about today, starting with number 10 in Office Depot. We're keeping our eyes on shares of the office supply retailer as they continue to climb in the pre-market as activist shareholders Starboard Value adds pressure to improve operations, nominating 6 people to the company's board. Julie?
Well, at number 9, we have Chesapeake Energy, the oil and gas company that counts Carl Icahn as one of its investors. It's been downgraded to underperform from neutral over at STERNE AGEE. The analysts there cite a potential $3 billion funding gap, also questionable hedging decisions, Dom.
Well, number 8, Jules, is DSW. The shoe warehouse operator is lowering its full-year forecast after missing fourth-quarter earnings estimates and starting off the year with a 5% drop in comparable store sales. DSW's full-year view is also causing concerns, falling short of estimates there, Betty.
And at number 7 is eBay. The online auction site is overhauling its seller fees to reduce costs for the first time since 2010, looking to compete with larger rivals like Amazon. eBay has also been bumped up to overweight at Cantor Fitzgerald and initiated as a market outperform at JP Morgan.
At number 6, we've got Citigroup, America's third largest bank. It's paying $730 million to settle a lawsuit accusing it of misleading investors who bought debt during the financial crisis. Citigroup denies the claim, saying it's settling to avoid the cost of uncertainty.
Well, number 5 is Electronic Arts. The video game maker is ousting its CEO as the company faces dwindling sales and forecasts that the fourth-quarter results will fall short of already lowered estimates. Investors are applauding the C-suite shakeup, with shares set to open in the green, Betty.
And at number 4, we've got Boeing and Ryanair. The airplane maker is completing a deal to sell 175 of its 737 airplanes to discount airline Ryanair in a sale worth at the list price $15 billion. We're going to have more on this deal when Ryanair CEO Michael O'Leary is in the loop in just a few moments.
At number 3, we've got Charter Communications. John Malone's Liberty Media is paying $95.50 a share to buy a 27% stake in the fourth largest U.S. cable TV operator. He's buying it from private equity firms. The total value, $2.6 billion, and this deal is expected to close in the first half of this year.
Well, number 2 is Lululemon. The yoga apparel chain is getting pantsed, lowering its first-quarter revenue forecast after a bad shipment of pants. They were too transparent and too sheer to sell, says the company. Lululemon says it will have a, quote, significant impact on the company's top line. They're also reducing forecasted sales by nearly 25%, Betty.
Of all the reasons to cut your earnings, I would not have thought of that one. Sheer pants. Okay, number 1 is Dell. Competition to take the computer maker private heating up as Bloomberg learns that Blackstone is weighing a bid to top the $24.4 billion offer from founder Michael Dell and Silver Lake. Dell has until Friday to seek better offers under the Silver Lake merger agreement.